To understand why the undervaluing of the RMB in China gives an advantage in foreign trade, you have to first look at the trades between China and another country. We'll use the United States in this example. Currently there is a trade deficit between both countries, so we'll take a look at two different companies. The first, the Chinese company, is selling cupcakes, while the US company is selling cookies. The Chinese company sells 20 million cupcakes at $1 each, and that gives them a revenue of 20 million US dollars. The US company sells 7 million cookies at 5 yuan each, which gives them 35 million yuan. Now, the US company wants to convert their 35 million yuan into 5 million US dollars, while the Chinese company wants to convert their 20 million US dollars into 140 million yuan. We'll say the trade rate is at 7 Chinese yuan to 1 US dollar. The supply of US dollars, which is 20 million, is much greater than the demand. The US company then trades 35 million yuan for 5 million US dollars. There's now a trade deficit of 15 million US dollars. If China did nothing at this point, the yuan would increase in value and the dollar would become weaker. They do not want this to happen. They want to keep the Chinese yuan undervalued. So they do this by printing more Chinese yuan. So, in this case, they print 105 million Chinese yuan, and then they go out in the market and they trade it for 15 million US dollars. They now have their 15 million US dollars converted into yuan. Now, what advantages does this give to China? Well, it favors their exports. It makes their exports cheaper, which causes more demand because costs are lower. This keeps the economy growing at a faster rate, makes their economy stronger. The cons to this is that inflation would increase. This would mean it would cost more yuan to buy more cookies. And this counteracts the artificial weakening of their yuan. It makes their cupcakes more expensive in yuan.